Hello everyone, welcome back to Forex Signals TV. I'm Shain Vernier, market analyst at forexsignals.com. Today we're going to talk about fundamental trading and fundamental analysis. Before we begin, we need to talk about the two types of market-based information, quantitative and qualitative. First, quantitative data is rooted in measurements and numerical values. If you are a technical trader that uses indicators and charts exclusively, then you rely on quantitative data. The second type of information is qualitative. Qualitative data are the characteristics local to a good, service, or asset. Fundamental analysis and fundamental trading, for that matter, all fall within the qualitative realm. This is the type of information that we're going to be dealing with today. Always remember, above all else, our goal is to make money in the marketplace. That means we don't need to favor one type of information over the other. Our job is to utilize the best data available to craft informed, strong trading decisions. If we do that, we have an opportunity to make consistent gains in the marketplace. So what is fundamental analysis? Fundamental analysis is the use of actual and/or anticipated relationships of supply and demand to forecast the direction and magnitude of future price changes. In other words, it is the study of underpinnings that can impact supply and demand, not to mention pricing equilibrium. Fundamental analysis involves the evaluation of external factors that have the potential to influence asset pricing. It does not consider price. That is the job of technical analysis. A few examples of fundamental data are official economic reports and central banking policies. Really, anything that influences the supply and demand curve of an asset may be incorporated into fundamental analysis. The vital aspect of fundamental analysis is this: it is vague. Fundamentals give us an idea of how far a market may move to the bull or to the bear, but no timing mechanism for entering or exiting the market. Think of it like this. For 2022, the U.S. inflation metrics all point to runaway consumer pricing. This should be a bullish sign for the USD over the next 24 months as the Fed will decrease the supply of greenbacks to restore pricing stability. While our fundamental analysis points to a bullish USD, there are no parameters for when or how to buy. In this way, fundamental trading isn't an exact science. Nonetheless, if you're looking to cash in on a long-term trend or reversal, then you'd best beware of key fundamentals. All right, let's get back over to the trading lab. Let's unpack this idea of fundamental trading and see if we can spot a few setups in the live market. At its core, fundamental analysis is an involved endeavor that requires significant time and attention. Fortunately, there are ways to make the process more efficient. Here are 6 tips for making your fundamental trading as robust and user-friendly as it can be. Tip number 1, you don't need to do your own research. Remember back in school when the teacher made you do your own homework? Well, those days are long gone. In active trading, the name of the game is to work smarter, not harder. When conducting fundamental analysis, feel free to use all resources at your disposal. There are countless research outlets that devote vast sums of time and money to building the best information products possible. Unless you have specific product knowledge or can study the markets 40 hours a week, it's a great idea to outsource the bookwork. Tip number 2, news doesn't equal fundamental analysis. Sounds a bit counterintuitive, but news reports are not the same as market fundamentals. Why? Simply put, fundamental analysis predicts future price direction while news follows price direction. This is a critical distinction. Always remember, fundamental analysis is predictive in nature while the news is reactive. That's what makes market fundamentals so valuable. They tell us what may happen, but they don't tell us what did happen. That's a key distinction, predictive versus reactive. Tip number 3, give the market an opportunity to digest fundamental information. All good things take time to develop. Fundamental trading is no different. It takes time for traders and investors to truly price in the value of key market underpinnings. Once they do, the market's true fundamental direction becomes evident. The breadth of the contemporary marketplace is immense. Accordingly, it takes time for price to digest any type of stimulus. For instance, assume that the weekly EIA crude oil inventories report shows a massive draw on the U.S. oil supply. Although this is a bullish fundamental market driver, short-term price action may in fact be bearish. While oil prices are likely to move higher in the subsequent hours and days, it will take time for the oil markets to price the negative stocks report thoroughly. Tip number 4, be demand-centric. As a general rule, assets in demand often are subject to large bullish moves. This is a major positive driver for long-side fundamental trading strategies. Remember, scarcity equals value. When a product is in demand, it has immense topside potential. Number 5, patience is a virtue. It takes time for fundamental data to be fully priced into a market. It's not uncommon for it to take weeks or months to completely price a shift in market fundamentals. The best advice that we can give to fundamental traders is to take your time. There is no hurry to dive into the market. Instead, think in broader terms. Also, it's important to understand that not all fundamental scenarios develop. Some fail to materialize altogether. Should this be the case, no harm, no foul. Simply move on to the next setup. Tip number 6, be decisive. An important distinction between technical and fundamental trading is timing. Technical trading is an exact science. To be successful, one must enter and exit the market with precision. That isn't the case with fundamentals. When we are fundamental trading, there's nothing wrong with entering the market even if price is already moving in our direction. Our goal is to capitalize on large moves. If we wait for the perfect pullback to enter, we may miss an exceedingly attractive opportunity. At the end of the day, good traders use all available information to make rock-solid decisions in the market. That's why many market professionals study fundamentals to project market direction and use technicals to time market entry or exit. If you're having trouble establishing consistency, perhaps fundamental trading is worth a look. Now let's take a dive into a case study here, Netflix stock for 2022. You'll see exactly how fundamentals work and how exactly you can use fundamental information to trade something like a stock exceedingly effective.
Okay, let's take a look at a real-world example of how fundamentals can actually dictate things like stock price, things like commodity price, and actual Forex pricing. This is a fantastic example from 2022. This is a view of Netflix stock really throughout the year. It was hampered by fundamentals and then revived by fundamentals. You can see back here in April, we had a massive gap down develop on that April earnings report. What happened here? Well, you had a decent report earnings per share wise, but you missed on the bottom side revenue. And what really was the big part of that report was we reported that there was a big time retraction in subscribers. And when we lost all those subscribers, all of a sudden the forward thinking, our growth projections really came off, and that hurt Netflix stock in a big way. Well, we came back with a decent earnings report right here, another fundamental market driver. How's the company doing fundamentally from an income standpoint? Well, they're doing okay. I mean, you have a decent surprise there on your EPS, but what you also have is another miss on the bottom line. Then look what happens in this October earnings report. It's a fantastic example of how fundamentals can drive price both to the bear and to the bull. Right here, you've got a nice surprise of 45% on your earnings per share. Your bottom line revenues are really back in check. And look exactly what's happened. You had a major gap up in price and really testing that area that was sort of sacrificed by the earlier meeting. So this Netflix chart is a fantastic example of how market fundamentals, in this case, corporate financials, drove stock price down and how it can drive stock price right back up. So when we're talking about fundamental trading, this example using Netflix is a fantastic illustration of how you can use these fundamentals not just to sell any sort of security, but also buy back in and maybe get a little bit of a value play to the top side.
No matter how you trade, it's important to recognize that patience, discipline, and decisiveness are the 3 keys to success. Don't overlook these elements during your foray into the markets. As always, be sure to check us out on the socials. Also, feel free to hit the subscribe button for news delivered directly to your email inbox. If you subscribe, anytime we make a move, you'll be in the know. And as always, leave a message below. We'd love to hear from you. The critiques are just as good as the pats on the back. Until next time, trade the action well, and we'll talk soon. See ya.